Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to the Midweek Takeaway Copper and Gold Special. I'm Phil Carroll, and today we're joined by Shaun, CEO of Great and Gold, Leon Coetzer, CEO of Jubilee Metals, and Colin Bird, Executive Chairman of Extract Resources, Galileo Resources and African Pioneer, to name but a few. Welcome, gentlemen.
Hi, good morning.
Hi, thanks very much for having us.
So in a week where we were starting to see commodities move upwards and markets getting a boost after China relaxed some of its strict anti-COVID measures, we also saw gold prices surge last week, up more than 4.8% to trade at $1,762 in early US trade last Friday, and that rise continue into this week. That rally marks the largest single week advance since July 2020, with a breakout of the yearly downtrend threatening a major reversal in the yellow metal. Starting with you, Shaun, I guess. Just what do you make of this move for gold?
Well, it's a positive move for gold, and it's been a little bit overdue. I think you had quite a subdued, last 18 months in gold. I think you've seen increasingly volatile world and increasingly, federal reserves wanting to hold more in gold. So they've been a really positive buyer, physical buyer for the metal. I think it's also been nice to see any nexus with cryptocurrencies broken, which I always thought was a tenuous relationship, but there were people who tracked that. So, I think what's now laid bare is, whilst gold is a hedge against risk, cryptocurrencies is an embracing of risk. Yeah, I think it's positive, and we like the fundamentals of gold from here, both in terms of demand versus supply, but also in terms of a volatile world where gold is a good store of value. And we continue to see high net worth family offices, continue to want to have some of their portfolio in gold.
Yeah, Leon?
Yeah, no, I suppose what's interesting is exactly as Shaun has said, is on the one side, the world reacting to positive news out of China, positive news out of America. And on the other side, you've got the world wanting to stock up on gold. I think what it suggests, as you've seen, is gold, copper, many other commodities responding from the news. It also shows how desperate the world is for a bit of good news. We've always said that the supply and demand speak for itself, the fundamentals. But it seems like the world first wanted some confirmation of good news before they reacted.
Colin?
Well, I think I'll buy into Leon's Freudian slip there. The world wants to suck up on gold because, quite frankly, we've got a lost world, but really doesn't know what it wants. There are so many factors out there which can work for gold that it's decided it's a bit of a roller coaster. You're not sure you want to be on that gold train, but you did get off. I suppose cryptocurrency looking as though it may implode. People asking questions, what was always going to be the ultimate haven now, and a lot of people aren't so sure about that. Not so sure about that at all. Whilst you've got a war and a potential escalation to the levels we're talking now, we're on the brink. Obviously, that has to work for gold. And the inflation that we expected in 2008, 2001 never happened. And so we're into this sort of phony inflation situation as well. I say phony because it's skewed. It's skewed to energy and supply chain. So really, we don't really know about that. And the forecast, as we see, not week on week, day on day, of what inflation is likely to be. The ranges are ridiculous. So I think gold is where it is. I don't actually see anything to drive it. Well, obviously, some very, very bad news in Ukraine to drive it significantly up. And the world's not going to suddenly change overnight. So I don't see anything to significantly take it down. I do look for the weaken. The dollar has to weaken. So that can't be the ultimate haven forever. So the dollar has to weaken. The Americans, I'm sure, don't want such a strong dollar when they're trying to trade the way out of the problems. So all in all, I see a more or less a range-driven gold. We're about in the range that we've been for the last year.
Yeah, it's an interesting one when we talk about the US dollar, probably the most indebted country now in the history of the entire world, is now basically the paper money, which is backed by nothing but we trust, basically is now become safe haven, which is, in my view, completely bizarre. I mean, the mentality is crazy. And I think what we saw over the last 10 days anyway is the dollar's dropped probably 8 or 9%, and gold has taken up the slack. So I can see, as the dollar starts to decline, that the gold should appreciate, because ultimately it is going to have to appreciate in all the other currencies to even stand still. You know, I presume that's the case with you, Shaun, as well, against the Australian dollar in terms of gold. How did gold move last week in Australian dollar terms? Did it move up?
No, look, it stayed relatively stable, but it's always been, I think, to my mind, global, gold exposed stocks trade sentiment on USD gold price. Throughout that kind of, period, AUD or Australian gold price was actually very strong. AUD gold price has remained strong, which is great for us being an Australian functional currency producer. But I think sentiment is run off the USD gold price. But I also think, I think the US dollar is a global currency, will continue to be the bellwether globally, and the US continues to grow strongly, has population growth. I think it's a hugely vibrant economy. But that aside, I think it is fair to say the really strong correlation we've seen in gold price over the last 18 months has been to an inverse correlation with the US dollar. So as that's pulled back, you've seen a rise in the gold price. And I think the other thing that you see is, over time, real interest rates should drive USD gold price. You've seen a pullback in inflation expectations from those real hikes back in March. You've seen federal banks respond very sensibly by kind of crushing it with interest rate rises, and that creates an environment where gold can flourish in an environment where real interest rates are not expected to climb too high. So I think it's a good environment for gold.
Yeah. And I think that says it all, really. I don't see much downside in gold, as Colin said, and I don't see a huge amount of upside. And one of the biggest drivers, I think, and please tell me if I'm wrong here, in terms of gold, is some of the actual jewelry buying in countries such as India and China, because we're talking about 2 to 2.5 billion people there, which is like a quarter of the Earth's population, a third of the Earth's population, who basically buys jewelry to create wealth. So what are your thoughts on that, everybody? I mean, do we see that continuing as those countries move more and more into middle class?
Just to add on that, Kev, China's significantly stepped up its gold purchases from Russia, obviously amid the Western ban following the invasion on Ukraine. And I think they said it was 750% up in July. So you're absolutely right. China have been relentlessly buying Russian gold.
Yeah. What's people's thoughts on that? Leon?
Well, I suppose we speak about gold, but it's not just in gold where we're seeing potential shifts in usages and where your metal is ending up with. I take a lead from what Colin said about the fact that inflations are, pushed up disproportionately by energy prices. The knock-on effect of such moves is that there are some real shifts happening in industry. And are they permanent? I don't know. The same question on gold. You are right. You've got nations, especially Asian nations, where wealth is shown in jewelry. And therefore, as they become more wealthy, they will buy more of the precious metals as wealth. But we see it in all of our industries. If you just look at the amount of industries shut in Europe that has now moved to China and elsewhere on manufacturing side, is that permanent? Possibly. We see the sudden massive shift into electric vehicles suddenly being pushed to the foreground again because of the cost of oil and the cost of energy. Is that a permanent accelerated view or shift into the use of the metals? Very likely. So I think the world is going to go through a very interesting phase over the next couple of months and year as we start to learn what impacts has the Ukraine conflict had on permanent shifts in the usage and allocation of metals in the world. We're seeing it just in the offtake of our products, where our copper was saw a home both in Europe and in China, and suddenly has been dominated now by moved into China. Our chrome products, we saw a usage in Europe through its production of ferrochrome and steel. It's completely shifted to China with a shut of that industry, or collapse of that industry just about in Europe because of energy prices. And I think that could be a permanent shift, because to get that industry back will be very tough under the current energy costs. So I think we're going to go through a period of actually understanding what permanent shifts have happened in our industries, and how the demand has shifted from possibly Europe into Asia. And ultimately, we need a healthy Chinese economy to drive our commodity prices up and our usage up. And then I expect that to come through quite strongly going forward. We see China recovering. We see it in our offtakes, where the demand of some of our metals has picked up significantly over the past 4 weeks, and even more so over the past 2 weeks. And as I said earlier, I think it's going to be an interesting time for us to see what permanent shifts have happened in this industry from caused by the conflict in Europe.
Interesting stuff. Especially you're obviously producing now, and we're going to have the actual pickup, and you can see it yourself physically that's what's happening. So what we'll do now is we'll just cut to talking about your companies. So we'll start with you, Leon, as you've just finished. So if you want to give us a couple of minutes just about your company and how it sits in that thing, and then after that we'll then move on to talk a bit about copper, I think.
Excellent. Thanks, Kevin. So Jubilee, we're a company that play in two worlds. We are in the South Africa, where we are producing palladium, platinum, rhodium producer, and one of the biggest chrome concentrate producers. We do all of that by processing materials for a variety of clients, as well as our own materials. And then in Zambia, we're about to dramatically expand our operational footprint in copper and cobalt. A couple of months back, we've just informed the market that we've commenced the southern strategy, where our refinery and our copper concentrators have been commissioned and integrated to produce copper. And we just last week commenced the cobalt production. And we're about to go very big into the north, where we look to dramatically scale up to beyond 40,000 tons of copper per annum. So that's where we are at the moment, and very closely keeping an eye on supply chains, because building in the current world, one has to really take note of supply chains and the disruptions in supply chains going forward. But that's where Jubilee is at the moment.
So last week, a 20% US dollar increased price of copper obviously goes straight to your bottom line at this moment in time.
Yes, Kevin, we couldn't have called the timing better for ourselves. As we launch our Southern Copper project coming on stream, producing its copper, the copper price finally responds to reflect actual supply-demand fundamentals. So it came at a very good time for us at this point.
Yeah, okay. Shaun, would you like to give us a rundown on Greatland Gold?
Yeah, thanks, Kevin. Look, Greatland is developing presently the Havron gold copper deposit in the north of Western Australia. We're doing that with our partner or joint venture partner, Newcrest, Australia's largest gold mining company and one of the world's majors. We think it's a really world-class deposit with this confluence of a tremendous geology of grade and size of deposit. The benefit of sitting next to existing infrastructure, being just 45 kilometres to the east of the existing Telfer gold copper mine, which is coming to an end. So this kind of creates a replacement feedstock. And thirdly, having a world-class partner or a tier one partner in Newcrest, which also has 35 years experience of operating in the Paterson region. So we get the benefit of all that understanding and knowledge for this kind of low risk, low capex pathway to production. So we're really excited about that. We're around 18 months into a 36-month decline development. So that's progressing really well. And the company a couple of months ago completed an equity and debt funding package together with augmenting the team on our board, which I think really sets us up for long-term success. And to augment all of that, we maintain a really active exploration campaign, and we still want to pursue our 3 pillars of our growth strategy, which is to deliver an expanded Havron, continue to invest in the drill bit of exploration, and consider additional growth and inorganic growth opportunities. So, yeah, really pleased with how the last 18 months has unfolded. Thanks.
Yeah, and I don't think you've had enough praise, both personally and in the share price, for the amount of money you managed to raise during these times, because the amount of money you raised, considering the markets in the last few months, was epic, to be honest with you. So, well done.
We were really pleased with that, both the equity and the debt raising, and I'm aware of the magic of leverage in terms of amplifying equity values, but you are rarely rewarded with a higher share price after an equity raise in the short term. But I think for me, it's all about generating long-term value creation. I think we do that if we successfully execute Havron.
Yeah, and just obviously copper gold special. What sort of ratio is Havron likely to have between gold and copper?
It's about a 1 to 4 ratio. So 20 to 25% copper. We really love that mix. We like our copper exposure. It gives us some diversity. I think Leon described his own company with that wonderful diversity in his revenue line. So we really like that about Greatland, and I love the fundamentals of gold, but equally I think copper is a fantastic kind of future-facing metal, and probably the best way to play that kind of electrification theme. So yeah, really pleased with that copper exposure, and we continue to understand the base metal structure within the deposit as well.
Yeah, so there may be other metals contributing as well down the line. Okay, Colin, as we call you the small miner copper man of the world, tell us which ones you're going to talk about.
Well, I'm going to stick to, as we said, first principles in copper and gold, which I guess has to take me into Galileo. And as we all know, and we've got to stay in the EV story because it's combined and it's collective. I mean, good Lord, whoever thought they'd see 26,000 nickel? Is that a function of market shorts, longs, and all of that business, or are we seeing a true recognition that the sulfide nickels are far and few between? But gee whiz, to see nickel where it is quite remarkable, which again takes us back to Galileo. Let's talk about Galileo and batteries and copper and gold, and then we'll probably move on to a couple of other situations. But one looks at Galileo, you're looking at its good position in the Kalahari. The Kalahari went to sleep a little bit when Sandfire got in the middle of their big build. I think it's 4.5 million ton mill there a year. And then, of course, went off and bought the big mine in Spain. It's kind of defocused the Kalahari. And then there's been discoveries and announcements from a number of companies, which demonstrates quite clearly that we don't know what it's all about, the Kalahari. But what it also demonstrates even more clearly is that both Galileo and African Pioneer are extremely well positioned in that belt, with licenses which are adjacent to, contiguous to, straggle, down dip, parallel, you name it, a number of situations. And so if we felt good about the Kalahari position a year ago, boy, we feel very, very good about it now. And frankly, we're doing a complete reevaluation of what we've got from a geophysical point of view. It's the same old story, Kevin, that, theories are developed. And if you're not careful, you hang on to those theories and get blinkered in your approach. The Kalahari, I think, the geologists were beginning to get blinkered. Blinkers off now, Kevin. It really is a great situation. And some of the drivers are not the drivers. And some of the underlying factors which might have prohibited copper presence, and certainly not factors which prohibit copper presence. So an whole new ball game, and boy, we're extremely well positioned. But again, back to Galileo, you look at 520 square kilometers surrounding Kamatabi. That can't be bad, can it? That can't be bad with all those pegmatites. And we've got 700 samples gone off for evaluation in our first pass testing. And then, of course, if you go down near the Queen Mines, about 20 odd kilometers from Bulawayo, we went down there looking at what might be a concealed greenstone, which might be beyond the capability of the artisanal miners. And in so doing, certainly discovered that 20 odd kilometers. but we discovered another 15 kilometers of ultramafics, which didn't report to surface, so had to be sort of tested. But we've even challenged that, and only last weekend we've discovered crops of these ultramafics, and they are definitely true ultramafics. And we got picked up pyrites and what have you. So we'll be drilling down with those in jig time. So what have we got down at Queen's? We've got nickel, back to the old EV story. Nickel, which is in very, very big demand, sulfide nickel. We've got a gold belt, which extends at least 20 kilometers, and extensions where there's existing gold infrastructure. So what is there not to be excited about? And I haven't even mentioned Lewin Sobe. Where essentially that's looking like 5 million tons of readily dug, open pittable material, 10 kilometers from the Mufflera mine. But it doesn't end there. There's definitely an open pit, and we're looking at this two separate exercises. And the other exercise is the deepest hole was 1,250 meters at over 2%. So again, that has to be investigated. But it's a nice situation to be able to start an open pit and at the same time go into a lengthy but detailed resource build-up in a deeper resource, which may be old style copper belt, which may be the new style, a new style copper mine. But the chance to get into production with a 600,000 ton a year mine, we'll be putting out the block models to the contractors shortly. And then, of course, again, in Galileo, we've got the Shinganda, which has come up with very nice gold results, very nice copper results, lots of intersections, and we're test drilling there too. And that looks to be IOCG. In fact, we're actually talking to a major who's very knowledgeable in that part of the world, in Zambia particularly. And they feel that there's an hybrid situation, IOCG stroke standard copper belt, which we're pursuing. And we had a gentleman out from one of the European universities who's an expert on IOCGs and that region in particular, to review some of our projects, which has given us insights we might not have had. So all in all, when you think about it, we're in that space with Galileo. And of course, not to mention the fact from a funding point of view that we were reasonably well cashed up. We had about £4 million in the bank, but we just got another 5.4 coming from our disposal, phase 2 disposal of the Glenover assets. So you've got a company there with the best part of £10 million market cap, but I think £10 million in the bank cash. A very, very nice bunch of projects, all of them drill ready, some of them project and development ready, with half the company's value in cash. So that's not a bad situation to be. And then once you go over to extract, as we've got the probably, which is one of the Leckland Fold's biggest discoveries for years. At the moment, we're doing resource modeling, and it's likely that we'll be designing an open pit whilst we figure out what to do with all of the other very, very encouraging geophysics that has emerged as we've gained our understanding over a couple of years and drilled 35,000 meters. And you should note that, Kevin, 35,000 meters for a junior.
It's a lot.
That's
Absolutely.
right. And we haven't been out with the begging bowl for a long time.
And you ultimately, right now, I think obviously we've got some palladium, or not, the different platinum metals, but you are actually producing a significant amount of gold in extract, no?
Oh yeah, that's right. Our own alluvial operations came good, and we're producing steady results. We never shot the lights out with those alluvials, but they've always been a great contributor. And we've been mining there now for 3 years, I think it is, and we never had a lost month. Always been a surplus of income over expenditure. But of course, now our JV has come into being, and I think we did about 35 kilograms last month, some 30 kilograms that order last month whilst we're building up. Of course, you get gold locked up in the circuit at this stage in the game. You've got to understand how you're going to do your grade control. You've got to bed and settle your plant down. So we're looking for very, very good income from extract for the balance of the year. And of course, next year, we're looking for more solid, stable production. And our plan is small mining as well in Zambia. We're currently looking at a couple of situations, notwithstanding Lewin Sobe being in Galileo. We're also looking at small mining situations because, Zambia is developed with large mines. There's a culture gap between large and small. Small is artisanal, large is very large. and there's an out in between. And I think we in our various acts, and in actual fact, be part of being the bit in between, if you like, in our various entities. And then we've got to mention because, that in our Northwestern venture with First Quantum, we've already announced that we don't think it's standard copper belt, that it's Congolese style mineralization. And we've talked about Kamoa. Kamoa is the newly started mine by the Ivanhoe Group, and is the world's richest copper mine. And I think it's the fourth biggest in the world copper mine, but it's certainly the richest. And so that has come up as a bit of surprise for all concerned. There was a suspicion that we may be in Congolese type, but we put up the political borders maybe a couple of hundred years ago. The copper was put in the ground a few 100 million years ago. So I don't think when God set about that, he thought about the Congo and he thought about Zambia. But one can get into that mode of thought. Oh, on the Congo side it's this, and on the Zambian side this. And aren't we human beings? Aren't we mortals of tradition?
That border was not built recently, or it was built recently. Anyway, let's ask Shaun. I'm going to give you the open floor to ask either Colin or Leon a question about their company. And I'm going to ask you, Leon, and I'm going to ask you, Colin, as well.
I'll ask Colin where he sees the best exploration opportunity in his portfolio.
And you've stumped me. That was a googly. That was a sadly he's died now. That was definitely a shame one. That was right around the back of my legs and knocked the off stump out. It's difficult, I have a league table. We have a league table. I try and be very formal and very rigorous in that protocol of a league. And it's amazing how number one can suddenly become number five for a variety of reasons. So it's very difficult to answer. And of course, one is comparing porphyries in Australia with Congolese high-grade material, with immediately available open pit, with facilities down in projects down in Zimbabwe, which are, I've got all the infrastructure around them, but I can't help being. I think that I have to edge my bets here, and it's going to be the Australian porphyry is really very big and is a major discovery. I've got no doubt in my mind, and I've also no doubt in my mind is the fact that we've established that the style of mineralization in the northwest Zambia is Congolese and not traditional copper belt. Has to be probably a career time achievement.
That's Colin's way of giving you two, Shaun, instead of one. Okay, so you got two for the price of one.
When you ask for a favourite, it's as I say, it's a rapidly changing world.
It's like choosing a favourite child, isn't it?
Yeah, exactly. So let's say Shaun. If I could wind the clock back, we were very deliberate in our activities in 2017. We recognize the copper fundamentals and the battery fundamentals. Of course, the war set things back, but I'm so glad we did it. And I think that in building what we've built since 2017, we've positioned ourselves across the board with potential tier one projects able to meet the demand when that demand comes. And it will come soon.
Leon, who would you like to ask a question to?
I suppose I'll ask Shaun a question. I was interested in, Shaun, the fact that you guys have a copper-gold project or a gold-copper project in Australia. Now, I wondered, with your views on copper and gold, do you ever look outside of the Australian borders? Do you have any sense of possibly dabbling into Africa or other territories?
Yeah, thanks, Leon. That's a good question. Look, I think we do think about the portfolio mix. I tend to think about investments in terms of return hurdles. So IRR as a metric. We think the lowest IRR hurdle for us is in Australia, just simply because we are most confident that we can describe our competitive advantage at operating in Australia. I think to add to that, we probably wouldn't be comfortable taking on permitting risk outside of Australia, even in a comparable jurisdiction like a Canada, which we think is a similarly tremendous jurisdiction for mining as Australia. It's still the nuances of that system. I think we would take time to navigate. And again, we would not have a competitive advantage or indeed a competitive disadvantage to local Canadians. So I would equally extend that to Africa or anywhere else on Earth. But I think for us, there is a threshold question around whether we would depart from tier one jurisdictions, such as in Australia. I think we would, but it would be probably a question around that return threshold. It would have to be more of a dripping roast for us to take on a higher level of sovereign risk in what is a very low sovereign risk portfolio. I think Western Australia is ranked number one on the present Fraser Index for global resource risk by jurisdiction, and it's perennially top five or certainly top 10. So it's a good question. It's something we think about. We're not deterministic on, but I think definitely the cornerstone of how we think about things are hurdle rates, but also trying to avoid permitting risk where we don't think we have a competitive advantage in that offshore.
Thanks for that answer, Shaun. I'm going to throw you now a googly. So what is the project that you're most interested in and you have the most potential, or you think you have the most potential upside outside of Havron in Greatland Gold?
Great. Well, I'm going to straight away follow Colin's path here and give you two answers. So look, firstly, I think it's very hard to ignore the continuation along strike from Havron. There is no better place to look for gold and copper than where it's ever been already been found. The Scallywag project runs directly along strike from Havron. We've got a number of good geophysical, geochem targets there that we want to understand more, and we continue to have an active drill campaign there. So I think that's a natural kind of brownfield extension. And to add to that, the hurdle for discovery is lower when it sits alongside existing infrastructure. But I think in terms of a completely new project, it's very much Ernst Giles. I think Ernst Giles is a virtually undrilled Archean greenstone, which is associated with probably 70+% of West Australian gold discoveries. I think the Super Pit, to have one of them in the portfolio which hasn't been explored, they are typically closely held. The reason for this being overlooked is it's undercover. Again, through our Patterson experience, we've really got a geological team designed to look undercover. That we think is our competitive advantage in geology. And we put a lot of emphasis on those geophysical understanding. So I think Ernst Giles is straight down the fairway for us, comes up wonderfully from a geophysical point of view. There are some very good targets to drill. As you may recall, we were just given a grant by the government, which is a competitive process to get funds to support a drill hole. So that is an independent verification of the quality of those targets. We do have to solve First Nations access to the site. That has been a focus for us for some time. We think we're close. I'd really love to be drilling that early next year. So Ernst Giles is the real wild card in the portfolio.
It's the 12th man. Okay, Colin, who would you like to ask a question to?
Who would I like to ask a question to? I'd like to ask Leon, when does he really, when does he believe that, not believe, because we live in expectation, we live in hope, but never in my history, and Leon's been in it a while, and as we share the question with Shaun as well. All of the old principles have been lost. I'm used to a disconnect between main markets and natural resource markets, the junior part of it. But never so long, never so persistent, and never so unexplainable when we have to be a call option. We have to be a call option to these metals, which are absolutely roaring. And I suppose that the question I'd like to ask Leon is a two-pose question. Is one, what does he agree that there is a massive disconnect? His experience has been quite long now in this sector. And what will actually connect us? So that the world, because we suffered for years, 25, 30 years from a underinvestment in mining, and now we're suffering again. What will in actual fact put the natural resource, and Leon is just about escaping the junior status, but nonetheless is in that very difficult situation of 300 million market cap, where he's neither junior nor senior. What signs is Leon looking for to bring us all back where with the flavour of the month, and not a month what lasts a month, but a month which gives us a sustained run at it. We've had so many of these 3 or 4 months where everybody loads up on secondary placings. You get a whole stack of IPOs, and then the investment world goes to sleep on us. What do we really need now, Leon, to get the junior markets, shall we say, invigorated again?
I suppose there's a couple of questions in there, and thank you for that one.
There's a few, yeah.
I certainly will come up with a more difficult one for you. But I think we have to start by just recognizing that we live in such a strange world where the youth and social media seems to forget that everything that you'd use in your daily life actually needs mining. It needs metals, it needs minerals to manufacture the stuff that makes life easy. And it seems as if the world has forgotten that. And certainly the youth has forgotten that. Mining was pitched as an ugly business. And it seemed to be put in the bottom drawer of investment. And I think there's a couple of signs I look for. The first is that as the world finally picks itself up from COVID and the conflict in Europe, starting to realize that it needs the metals and the minerals, and it needs a lot more than what currently is available to sustain these wonderful growth targets that the politicians love to speak of. It needs a thriving mining sector to deliver that. And a thriving mining sector is fully dependent on the junior sector, who is the explorers of the mining sector. And that's what really died or suffered over the recent past, where the explorers didn't happen. Take Zambia, classic example, where the basically exploration dried up completely in Zambia. And you mentioned it, in that in Zambia, you've got either very big mines or very small artisanal mines with nothing in between. It speaks of an industry that had suffered from no exploration at all. And that is the opportunity, I think, that will finally ignite the junior sector again, when people realize that the fundamentals of the metals speak to the fact that there just isn't enough being mined to serve the expectations of the world's growth and economies that the politicians speak of. And that can only be delivered by an exploration sector and a junior sector who finds those new areas to explore and deliver those metals. A company like ourselves is classic. Once you've done that, we've gone into the hiatus of building, expanding, and operating and delivering metals. For us as Jubilee, our task now is to actually demonstrate that you can, as a junior company, evolve into a medium and large company as you go through the development phases of exploring, developing, building, expanding, commissioning, and then as Shaun mentioned, actually going to different jurisdictions. One can never underestimate the competitive advantages Shaun spoke of, your local knowledge of the industry and your local knowledge of the nuances of the industry. And that's where Jubilee is going into. And I think once the world realizes that we can, as Jubilee, I have no doubt that that'll reflect in our valuation. But I equally firmly believe that once the world realizes that they need mining, and for mining, they need a junior sector to actually deliver on the world growth, we'll see the demand come back into the junior sector, because we can't afford it not to exist to deliver the metals, the mining, and the world needs.
Okay, great answer. Guys, let's move on to copper and what is copper all about. So we'll let, I think, Mr. Junior Copper start this one with Colin. So Colin, where are we at with copper in the world? I mean, we've got all sorts of reports saying, by Christmas, there'll only be 3 days worth of actual copper in store. Where are we at? Where are we headed?
Well, where we're headed, in my opinion, is that we live in a fairly sort of, as Leon says, that there's a lot of bright young people around nowadays who don't seem to want to realize that you cannot have opposite statements supporting one another. And, when the Chinese drove us down to 7,300, it was almost that the reaction from Wall Street, the reaction from the City of London was that, the copper story is overdone. which meant that really there was a complete sort of shutdown on what the world is all about. You turn the television on in the UK particularly, and just every second advert is about a new electric car, the more shiny than the last one, more jazzy and glitzy than the last one. Forecasts of how many we're going to make are bigger than the last one. So quite frankly, if you believe in Armageddon, then you've got to really load up on this gold. But if you leave it on bright new future, you've got to stock up on copper. And stock up on copper is not what's happened. Look at London inventories, like you've just said, London metal inventories. My theory is as simple as this, that the Chinese panicked. We know how humanitarian they are. Wasn't it surprising that everybody had to stay in bed in Shanghai, Beijing, and all of those major cities? That's the only way they could stifle demand for all of the metals, not just copper. Because if you locked in, and when they say locked in China, they mean it. You know, it's not a suggestion that you're locked in. You are locked in. You're locked up, not in, locked up. And they only managed to get the price down to 7.4. And the very, very suggestion that they're going to go out of bed, go to work, build things, make things, buy things, up went the price to 8,004, and up went nickel to 26,000. So where are we with this copper story? We're in, quite frankly, you know, one doesn't want to score from doom, but where we are is the world is in a mess. It's in an absolute mess when you look at copper requirement forecasts for 2030 and beyond, and even 2027. And before, there's going to be an imbalance between supply and demand. And then if you look at, authoritarian countries, look at where the copper and these primary metals are coming from. You've got true democracies, but then when you start looking at authoritarian democracies and you start looking at DRC, Kazakhstan, Russia, and their contribution, what might have been parts of Latin America, Chile going upside down, who wants 30%, a president who really doesn't want mining. We are in a mess. And I think what isn't appreciated only by those who are closely in the business is that I talk about that porphyry in Australia, for example. From the day you discover a mine to actually cutting the ribbon and starting the project, for a massive porphyry, it could be about 12 years, 14 years. For a decent sized mine of, say, 80,000 tons of copper a year, you're looking at 5 to 6 years. We're already about to enter 2023. Supply is going down. New projects aren't being announced. And the demand is very, very real. These guys aren't building the motor cars and have spent the billions they've spent on EV design. They hope that they'll be able to get copper, cobalt, nickel. They've got to go and get it out. And, the guys who should be really worried are the metal traders, because we're seeing so much deal making now between producer and producer of raw materials and end user. Because it's actually, I don't think, Kevin, it's going to be about price anymore. I think it's the scarcity or the reliability of supply is going to be one of the key drivers of these contracts. So where are we with copper? A very, very quick answer, that we weren't in a very good position 3 years ago. We're in a terrible position now. And if we don't get the world sorted out, we're going to be in an even worse position. And I'm not going to be sitting here and blowing my own trumpet and talking my own nonsense in my own book and saying, look, for $15,000, $17,000 copper. Quite frankly, I was amazed that we managed to keep it at 7.4, 7. I think 7.3 was probably worse. And, I'm not at all surprised it's gone to 8. We went to 8.4 very quickly. So there's a lot of money to be made for the juniors. But, don't let's be short term. We're talking about here we're being more philosophical about an emerging world. That emerging world is desperately in need of copper. The copper projects aren't on the table. And I've been through it often enough to say with certainty that 23, 24 will be seeing a feeding frenzy for juniors who've got good copper projects, like has never been seen before in the history of junior mining. Because quite frankly, the majors aren't going to find these projects. And also, Leonity knows as well, there's going to be a shift in what when we talk about mining, that the size of mines. Of course, the artisanal miners aren't going to obviously not going to satisfy the copper requirement. And if it takes you between 5 and 12 years to build a new mine, there has to be a role now for that mid-sized miner. And I think that's where you'll see some particularly attractive growth in our industry. Juniors go into mid-tier miners, if you like. And I think that's where most of the companies I've been involved with, I think that's where they're well poised. Because, I've got another slogan. I didn't manage to get it out, but I'm going to get it out now. The day of the small miner is back. The day of the small miner is back. If you go back to 2006, there was lots of little companies who would produce 10, 15,000 tons of copper. They all disappeared, gobbled up by the majors. 208 flattened everybody who got any mining company who got in aspirations of building a small mine. Projects which were 2/3 finished were just flattened. So we will live in a period of changing dynamics, but you can bury the head in as much in the sand as you like. If you believe in a bright new world, copper has got a tremendous space in that new world, but there is a serious imbalance. The perfect storm is brewing between supply and demand. And quite frankly, I suppose, Kevin, you'll say you've always got the answers, but I haven't this time round. I really, ore bodies aren't as easy to find. You don't drill next door to a current mine and find a new ore body. Zambia has been blessed with mines which were started in 1920 and in 2022 are still producing. So in Zambia, you've got to go out, and it is so fertile in potential, it can't be true. Africa is so fertile, I think more so than Latin America, that the explorers, the juniors, because the majors aren't going to do it, have got to go out and find more of this copper. But again, I'll just round it up by saying the situation isn't serious. It's desperate between supply and demand. And every day, obviously not by the day, but every few months makes it worse.
Shaun, what's your thoughts on the copper story? Thanks for that, Colin.
Yeah, look, I think copper is a tremendous way to get exposure to the electrification theme or thematic. So I agree. Look, I think demand and supply ebb and flow, but I think the long term is really strong. I love having copper in the Greatland portfolio. Together with gold, they really complement each other beautifully and provide diversification. I do think that over time, to comment on Colin's thesis, is maybe to go back to Leon's comment, I think one of the things we're seeing is that to deliver this electrification thematic, you do need additional, metals. Again, to follow Leon's comments, everything we use is either grown or mined. And if you are going down a path of a massive electrification, from cars to wind farms, solar things, all of these require metals. And I think 5-10 years ago, mining was perhaps at a little bit of a low ebb in terms of how it was viewed. But I think today, increasingly, I see both in financial markets, in terms of government policy, but also perhaps in the minds of the public, there is now a dawning that mining is essential to deliver the future society and the high quality of that future society, both in terms of higher quality lifestyles, higher quality environmental outcomes, and higher quality of technology. And I think that provides the platform to transform the view of mining and see it as a very necessary and important part of the world's economy. And I think that if you're a believer in that electrification, in that EV story, such as I am, I think it's very hard not to believe in the future of copper, but in a raft of metals. And I think we should be really pleased about that. I think it makes our sector an extremely investable space to create value over the medium to long term.
Thanks for that, Shaun. Leon?
Yeah, I think Colin and Shaun really summarized it nicely and highlighted a couple of really strong points. And the fact is that, as Shaun said, the world needs metals. That's a fact. I'm a firm believer that the world, and not thanks to, I suppose the wrong word, but due to the crisis in Europe and the knock-on effect of that, I think the whole electrification push will simply accelerate, and that will bring a raft of demands of metals to deliver that. If you believe in that electrification, which I think most sensible people do, your safest bet is copper. You're not betting on what the next technology might be in batteries. You're betting on the fact that you need to conduct the electricity generated. And therefore, copper is your safest bet within that space. And I think, as Colin said as well, the world will grow, I think, more steadily. I'm hoping for a less volatile world where copper is anything from $12,000 to $7,000 a ton of copper. You'd far rather in our industry would want to see an appreciating price within a controlled growth environment. The copper fever was at its height a couple of months back, and that makes it even more difficult in our industry. So I see that copper has surprisingly held up during all of this volatility. Copper, again, breaching $8,000 a ton just indicates the demand. It indicates the recognition, as Colin said, of the perfect storm of supply-demand crisis in copper coming and not into the too distant future. And therefore, I think copper, is a safe bet on the electrification. Equally, copper is a safe bet on the growth and world growth, on the building sector in China finding its feet again. Copper is that stable element that really is needed in all of those sectors. You've seen the world moving into cities. You've seen electrification coming. We all know that the numbers have been thrown around a lot, that just for the fact that from going from an internal combustion engine, which most of us drive, to an electric vehicle, you need minimum 2.5 to 3 times the amount of copper for that vehicle. So even the take up of electric vehicles being modest, the take up of copper demand is significant into that sector, and that really is what pushes copper. And Colin made a very valid point that if, as a mining industry, I think the time is now to secure your copper assets to be ready for that demand. I think 2 years from now, you might be too late to want to secure your copper assets at that time, because they'll be priced significantly higher.
It's a funny thing, really. We all talk about EV in terms of copper, but actually, what you've just said, Leon, the urbanization of the world, because in the West, we don't really see it, because a lot of the West is already urbanized to a very high degree. But especially in Asia, especially in India, China, Africa as well, urbanization is taking place. It's not a case of it's something that's happened, and all of that takes copper. It takes all the metals, obviously, but it takes copper. How many literally millions of more refrigerated units are you going to need? How many more of all of these different things that you're going to need? Just the things that go into the house, a washing machine, et cetera, the copper pipes in a house for the water. All of those different things are happening. I mean, I live in Cairo, and there's building all around me, building in new cities. They've just built a brand new capital in 4 or 5 years. The amount of metal in general, but copper especially, that's going to be required to service that is massive, and it's like 5 million people. So
the world population just bust through 8 billion, hasn't it? They've just announced, and it's not showing any signs of slowing down. So for sure, it's needed.
Absolutely. Yeah. And copper is connectivity, and without copper, we aren't connected. And we saw just look at COVID, when suddenly everybody stocked up appliances in their houses because they lived inside their house, not outside of their houses. How the demand of copper spiked to exactly as you say, to be able to deliver these appliances to people. And you're right. You look at Africa, you look at Asia, you look at China. You see cities being built at the moment as people are moving into urbanization in these countries where rural living was the norm a couple of years back.
Yeah.
That's a very good point, Kevin, because we've been rattling on about electric cars, but even before the forecast got more aggressive and reality swept through the door with the global warming and politicians seeing that, putting incentives in for electric cars. We were still forecasting quite a big shortage just based on what we're talking about now, that a world with more disposable income, a world where individuals have got greater expectation of standard of living, which amounted to telephones, which amounted to fridges and white goods and whatever and that alone would have put the copper industry under significant pressure before you introduce all of the other stuff we've been talking about. And so it's a very, very good point, Kevin. I do agree with you. We tend to get carried away with tomorrow's world, when in actual fact, today's world and its fundamentals provides a hell of a lot of increased demand for copper.
Yeah, absolutely. I mean, there are cities going up all around the world, all over the Middle East, all over the Far East, all parts of Africa. I mean, people still have this image of, you're going to land in a big city in Africa and it's going to be, huts and all the rest of it, but it's far from it when you land in those places. They are metropolises and very, very big cities as well, I mean, Cairo is a good example, 20 million people. It basically has to expand by several million people every year because of all the people coming from outside of Cairo to live in the main city in Egypt. So it's just building new cities every year. That's why I live in New Cairo, which has 5 million people in it, which is part of the total of Cairo. But there's building going on everywhere. And all of this is going to make a big difference to metal. And all metals as well. Steel is another thing, isn't it? We're going to need, I mean, the US has just created a huge $1 trillion infrastructure budget and it's passed. All of the other economies after us going through this are going to have to spend on infrastructure projects because ultimately that's how they tend to get out of recession. Let's build a big infrastructure project. So steel, coal, all of these things that have been shouted down that we couldn't possibly have more of these, we couldn't do this because we want a green world. But to get to the green world, we have to use these things. Otherwise, we won't get there. So,
Kevin, you don't have to go to Johannesburg for potholes. Take a ride around America and see a lot of roads, a lot of old bridges, which they're worried about. Some of this infrastructure is far too old for use, well past its sell-by date. And governments and municipalities haven't got the first idea how they're going to fix up the infrastructure, let alone, so we're talking about cash, and that cash is going to be turned into raw materials. And are the raw materials going to be there? I doubt it. I really doubt it. So when I'm talking about a perfect storm, I wasn't talking about a very desirable position. I was talking about a true, I think we're the days of flying over cities, which are lit up in the sky in your 777, and you look down there, then we've got to start turning the lights out at night. Then we go back to vanadium for storage. We've got to learn if we're going to generate all this energy, which is dependent on things like the wind and dependent on things like the sun. We've got to be able to store energy because the sun goes out and the wind stops blowing. So it's not a kind of it's not a, and I get mad actually when I hear people talking about a commodity, short-term commodity super cycle. Super cycle to me suggests that something is going to have its day in the sun. And that's how stock markets behave. You go from sector to sector. Mankind is facing a new industrial revolution. It's as big as the industrial revolution. And it's basically the way things are done are changing. And as Liam said right out at the start there, the dynamics are changing by the day. Everything is changing, and we've got to be in a very reactive world, which is able to manage that change. And, I'm getting a bit philosophical now, and tears beginning to well up in my eyes. But it's bad to have a divided world politically when you've got a common problem. And it is so bad when there was never a time, I don't think, in the evolution of mankind where we didn't need unity, cooperation, and the mutual tackling of a common problem, global warming, and the need to feed.
Now you are getting philosophical,
right.
Colin.
I think on that beautiful note, we'll wrap it up.
We've never had a time like that.
So, but these things are real drivers, and we should look forward. We should look forward to the future. I think this setback in Europe has been terrible, but we should look forward to a bright future for the metals. And I think collectively, all of us should thank our shareholders for supporting us through what has been a difficult time for at least a year, 18 months, I think.
Very good. On that note, I think we'll wrap things up and say Leon Coetzer, Shaun Day and Colin Bird, thanks very much for your time.
Thanks, guys.
Thank you. Thanks very much.
Thank you guys for your time and great insights.
Thanks, Kevin.
Thanks, everyone.
This podcast was brought to you by Roast PR Limited. If you would like to appear on a future episode of The Sunday Roast, please email admin@thesundayroast.net.